Good morning. Welcome to Master Trader, where you can learn to use simple market and stock analysis to make money investing and trading. I'm Greg Capron. Today we're going to look at the markets, and we've got a very unusual situation here. We actually have a bearish start to the day, which is not all that unusual historically, but in this current market it's a little bit unusual. And what's a little more unusual about this is the fact that it's gapping down under these three consolidation days on the S&P 500 spiders. This is the ETF of the S&P 500. This is a 24-hour chart where you can see where it's trading at the moment, and it has moved down to around 257.50. And if we see where that is here on the big chart, the low area was about here. So it was coming into this little support right over here, and it's bouncing up. Now, I was assuming that it opens up around that area in, we still have quite a while, about 40 minutes or so to go to the open, and it gaps down under these lows. That's at least a short-term bearish situation. So the question is, do buyers want to come up and buy the dip here? Now, I don't think so. I think that, personally, down here around the 20 MA, these bottoming tail bars would be a better place in that support. And we always look to the left to see if there's any significant support here. And so let's just draw a horizontal line. You always look to the left, look for where the support is there. I tell you, if you're drawing trend lines diagonally from left to right to the upside there, you're doing it the wrong way. Those are irrelevant, they're subjective, and I know that's what a lot of people do, the majority, but connecting dots is not going to show you where support and resistance is. Just look over to the left. You see this little swing low right here, where it's gotten down to close to where it bounced up, and then down in this area down here is where the buyers are likely to show up. Now, the way that this has come down, much vertically to the downside, that's a pretty powerful type of a move. And while it creates what I call a void up above, because it is a vertical move, you do not want to be a buyer here yet, because it's the start of the move down from this retest pattern. This exact type of pattern, if it was happening on the second or third move to the downside, meaning some retracement and consolidation, and then down, then we would be looking to be a buyer on that type of a climactic setup. We don't have that now. This is more suggestive of the type of pattern that will continue to the downside. So we got a bearish gap down under several lows here. It's still in an uptrend on multiple time frames, so still bullish, and we'll see where the buyers want to step up here. The NASDAQ 100 also gapping down, and you can see it has a void below, no real support here, and around 153.20, gapping down below all of this area here, so short-term bearish. And let's see what the futures look like. Well, a red bar, which is hasn't been the norm of late. I mean, look at how few red bars there are, and this one. This one is close, short-term bearish here. It did get a couple of days to the downside, and the bottoming tail bar is where buyers wanted to step up again. And I would look for the same this time. Prices come down to the bottoming tail bar. Look for buyers to step up again. Gold's having a decent start. It's been consolidating here, building some support. It's trying to get going up into this area over here. We'll see how that does. And crude oil, it's consolidating its gains. It's had a nice little run and consolidating here. So we'll see how far that goes. So we got a bit of a bearish start to the day, and I have to get to some of our traders. We have a live trading day today with our options traders. If you're interested in a class and that type of live trading, give me an email, greg@mastertrader.com, and I'll get you some information on that. All right, guys, have a great trading day, and we'll talk tomorrow.